All right, welcome everyone. It's Monday. It's probably the best day of the week, right? It's Monday. As traders, I feel like I'm just got the weekend. I'm just waiting for the markets to open, for Monday to come along, for me to get ready to do some trading. What about you, Victor? What do
Monday
you
is,
think?
I think Monday is the best day of the week because our working day starts. As traders on the weekend, you are waiting for Monday so you can hit the markets, unless you're a crypto trader, of course. But as forex
Yeah.
traders, Monday is you're anxiously waiting for Monday to come so you can do what you enjoy doing. How
Yeah,
is
I
everyone
remember
doing?
when I remember when I was trading crypto a lot, and when I transitioned more to be in I believe in 2019 I transitioned more to be more active in the forex market, and I mean honestly that was pretty that felt great because I was able to really relax during the weekends. I think that is yeah, definitely. All
Yeah,
right,
it's
guys, let me know. Let me know in the comments how your week has been, how your weekend been, and I want to know something. I want to know if you guys are doing any weekly trade planning during the weekends. Are you doing any trade review, any journal review, or anything like that? I would love to uh, let us know in the comments. All right, so today we're going to talk about reversal patterns, and by the way, guys, remember that we got over 100 people tuning in right now. We've not even been live for a minute, so make sure that everyone who's in here right now hit that like button. It does help us a lot. It helps the channel, and it does help us a lot. So make sure that you do hit that like. I've blown 7 accounts this week. Oh, that sucks. That's a lot of accounts. Hopefully that was sort of like a joke, maybe because 7 accounts. It's pretty. That sucks. That sucks. This week I'm back
yeah.
testing. That's great. That's great. Um. Oh man, we
Seven
got
seven
another one.
accounts is I think it's a good sign of you need to slow down because
Yeah.
yeah, it's that's I mean we all have blown accounts and there's nothing to be ashamed of. It's just part of the process. But seven in 1 week, that tells me you are, yeah, you need to slow down. You may have you need to adjust your process because something you're not doing something right. You shouldn't be blowing account that often in 1 week.
All right. So that was actually a joke, but
Oh, it was a joke. Haha.
I was like, maybe we should do this whole session around that comment. And it's like, yeah, that's a joke. That would be fun. All right. So we got Anne says, yes, I do some trade planning on the weekends. I do my weekly review Friday afternoon so I can enjoy time off. This is actually really good. I've started doing that as well. I've started doing my trade review during the actual working hours on Friday. So when I actually get off from work or when I leave the office on Friday, I can completely, relax. And then closer to Sunday evening, like a couple of hours before the markets open, I do my weekly planning. And for the whole of April, I've had a very good winning streak. No, but I wouldn't say winning streak, but I would say like I'm in the completely right state of mind, and I have the right approach to everything in my trading, and I would say most of that comes down to my planning on the weekend. I actually wanted to on that topic. I wanted to show you an example of that. So here we have a trade on GBP CHF. So I'm going to be using the replay function here just to show you what I was looking at and when I actually made the plans for this trade. So we'll go back to Friday. So we got Friday, candle is closing right here. So this is GBP CHF, and I saw this, and I looked at the weekly. I saw this on the weekly, and you could clearly see that GBP CHF here is hitting a high time frame level. This is on the weekly; it's hitting a high time frame level, and I'm thinking, you know what? We have it's a very strong resistance right here, and we also have a decent support below. So to me, it kind of makes sense for. I don't think you saw my writing there, by the way, because it did write on the screen. You can't see this, right? No, you can't. Okay. I got to go back. So here you have the weekly resistance area, very strong resistance right here, and then we have this level below where I'm thinking this kind of sort of looks like an area where you might see the. Sometimes we talk about levels acting as magnets, right? Where price kind of wants to pull back to that level, and this is on the weekly. And going down to the daily, we see a good trend going here. It's very visible on the 4-hour. You kind of see that trend. I've added the trend line just to illustrate the idea of this trend. So if I'm thinking that price is going to get rejected off this weekly level, so I'm watching this. It's Sunday evening, right? It's Sunday evening, and I'm looking for a rejection, and I'm looking for basically just a break of structure here at the high time frame level. And moving forward here with the replay tool, we can see that the trend line is breaking here, and then we have that break to the downside, the support level breaks to the downside, and then I put in orders here. So made the plans based on high time frame levels, and I'm using an approach which is like, yeah, look for high time frame levels. I want to enter at the high time frame levels, and then I'm just going to be using the idea of set and forget. So I put my orders in. So I entered this trade on the 14th, and now April 22, I'm still in the trade, and it's well on its way down to TP. So this is the power of making, I spent 2 minutes on this chart on that Sunday evening. 2 minutes, added alerts. I knew exactly what was going on. I knew exactly what I was doing, what I was going to do when the level broke, put in the orders, and didn't think about this trade at all. It was letting it run, doing its thing. And I think when you really do have complete and clear plans on the weekends, and you make very detailed plans, it's just so easy to trade going into the week. One trade that I've looked at as well, I have an open position on this one right now. So yesterday, before the market opened, I looked at this idea as well. So you can kind of go to Friday. We got Friday right here. And Sunday opens, got a Friday right here. So I looked at the daily, all right? And I said, you know what? That wick kind of filled the reload zone very nicely right here. It hit that level. And we're now seeing sort of a bottom formation forming here. So I said, when making this plan, I said, I don't know exactly how, but I want to go long here, and I want to take profit at the last local highs. I'm not sure exactly what that would look like, but then obviously this morning when going into the 1 hour, I saw something very, very clear with price breaking above these highs, and I was looking at basically a break and retest of this level. So moving forward to Monday, we get this. That's the breakout. And now we have a start of a break of structure. This is the downtrend right here. I'm looking at that trend line. I'm looking at that as being a new higher high. If we can get a bounce down in this area, we have a new higher low, and I'm expecting price to break this downtrend and form an uptrend up to at least the last local high. And this is what we got right here. So when we had that bounce and the close of that 1 hour candle, I entered the market with that stop loss. And this is where we are currently. And I'm looking for a quick 3R. Well, maybe not quick, but it's just a set and forget trade, right? So what I'm showing you here is the power of making detailed plans during the weekends. If you're not doing that right now, I highly, highly recommend that you start doing that right now. Victor, are you? What about you? Are you doing any planning on the weekend or any trade review or anything like that?
Yes, I think the preparation is key. If you're going to be profitable, you need to prepare, because if you're just going at it without preparation, I mean, you're not ready. In my mind, in your mindset, your mindset as well needs to be prepared beforehand. So in the weekend is the place where you can level out your mindset, Have your expectations based on the data, uh, what the data has told you that it should be, right? Not get too far ahead of what you can expect. And what I do is I don't do like technical analysis on the weekend. What I do, because my process starts every day, so my technical analysis starts before the market starts, right, before the session. But what I do in the weekend is monitoring my trades, monitoring how I what how my process went that whole week. So doing that weekly review, that's what I do on the weekends. I think it's very important because otherwise you might be deviating every day a little bit away from the process that you should be taking, and you don't know it unless you review critically and identify if that is the case and correct yourself. So weekends are very, very important. I'm a intraday trader mostly, so my process doesn't rely on preparation on the weekend, but the overall process, weekends is very crucial. Yes.
Yeah, definitely. I think, and also, uh, yeah, I think taking an hour or two, during the weekends when the market are, when the market is close is it's kind of like it's a nice feeling. It kind of feels like it's calm, because as a trader, as soon as the market is open, I always think like, where's your USD, where's that trade going, what's Bitcoin doing? Like I always have that in the back of my head. But then on the weekend,
Hmm.
it's like, yeah, now when I don't have anything to think about, it's better to stick with the trade journaling and all of that. This is a good question. How often do you backtest? I backtest quite a lot. I especially backtest when the market is slow. If I'm in I backtest a lot for trading psychology reason. And I don't know if you guys remember, I had in a live stream, I did a presentation a while back talking about trading psychology. We also uploaded that on the YouTube channel. So it's a good video. Check that one out. I think it's called Trading Psychology, uh, something with mental game. So check that one out on the YouTube channel if you haven't already. I talked about how I backtest to work on my trading psychology as well. So imagine that you're in a losing period, right? And you kind of start losing confidence. You have maybe 6 losses in a row, and you start questioning the system. At that point, a lot of new traders, they start system hopping, right? They switch to a new system, they tried something new. What you should be doing in that case is you should backtest, and then you should backtest um, you should compare the backtesting results during the same period as you have your drawdown to see if it's the same. Because sometimes trading, when you're in a drawdown, sometimes that's just part of the system, right? So you got to make sure that you backtest to see if is it just your system that's in drawdown, or when is the backtest results actually much better than you live trading? Because then it kind of gives you some clues on what to work on. If there's a huge difference between backtesting and live trading and you're in a drawdown, that means that it's not the system, it's you, right? So it's important to remember, it's the system in a drawdown, or are you in kind of like a mental drawdown, if you will. So for me, backtesting is has a lot to do with trading psychology. Yeah, and again, like backtesting also, it will help you stick with the rules, right? And because it kind of reminds you of, if you backtest, you'll know what the system is all about. And if you're only live trading, sometimes you'll forget what the system is all about, right? But then you go back to backtesting, it's like, yeah, this is what I'm going to be doing, So this guy doesn't backtest because it has a superpower. Probably trades ICT as well. So yeah, ICT traders doesn't have to backtest, for what I
I
know.
I see that too, and I suppose it is possible to be profitable without backtesting, but I don't know any other way than doing backtesting, because
Yeah,
it might be something personal, but in essence, what I think is, um, re, if you really want to, if you really want to know if you're profitable, you have to measure it first. If you haven't measured it, how do you know you're profitable, right? You can go at it doing forward testing, which can replace back testing, but you do have to have back testing. And by, I mean, you have to have data testing. With forward testing, it's not just trading, right? It is similar to back testing, but you will have to go and analyze it to measure what you're doing. And for that, you need to be doing the same thing consistently. So, but I would, the drawdown that I have, or drawback that I have with forward testing, is that it takes much longer. If I want to forward test 1 month, I need to actually, wait that whole month. That takes a lot of time before I get the data in so that I can analyze. Instead, I prefer backtesting because I can do it in my own time and I can do it quickly. I can do, for example, in my case, I can do 1 week of data in about 1 day, which is still a lot of time. So if you think about it, it takes about 4 days for me to backtest 1 month on one pair, right? Because I have a lot of moving parts in my strategy, or it's very specific, I should say. But I don't think, well, and that's an opinion, but I think you need to have data. That be backtesting or forward testing, you need to have data to know what you're doing, because otherwise you're just winging it, and it can work for some time, but it's not going to do good for your consistency, because months later you might be doing something completely different if you're not measuring it, if you're not having those strict rules that you're using. And how do you know that you have adhered to those strict rules? All of that is in your data, in your either back testing, if you compare it to what you have been trading already, or your forward testing. So yeah, I don't think the strategy, whether you are ICT or not, is any excuse for not having data. You need to have data.
Yeah. So, it's like trading a system that you haven't back tested is like, I don't know. It's like, yeah, I was going to think of something good to say, but then I'm like, what is it like? It's like, I don't know, like driving a car without taking driving lessons, almost. Like it's you're basically gambling. That's what I was saying. So
Yeah.
you trade a system, and it's like, yeah, let's try this and let's try that, but you don't really know the win rate. You don't know. So if you don't even know the win rate of your system, now of course you could use live trading and forward testing, and if you're getting good results, then good on you. That's amazing. That's fantastic. If you are getting good results without really back testing your system, that's amazing. That's awesome. But most people aren't getting that. They usually go into live trading and they start trading and they don't make any money and they start losing a lot, and that's why and when you have to back test. We have a good questions, very good questions. I'm impressed with the questions here, guys. I am going to run a quick video for you guys explaining a little something we have going in the Discord. So I'm going to run this video, and then I'm going to go into Discord, and we are going to look at a trade setup. Yeah, so check the video out. It's just 2 or 3 minutes, and you'll understand what it's all about in just a second. What's up, guys? So, as you know, here at The5ers, we really want to help our traders truly achieve success in trading. And we're constantly looking for ways to improve not only your experience, but also to help you grow as a trader. So today we have an exciting announcement. We want you guys in the Discord, members of our community, to be able to be more directly involved with the live trading show that we have on YouTube. So we've created 2 new segments in Discord where I want you guys to go in there, and I want you to post your trade setups with as much detail as possible. We're then going to break it all down in the live trading shows with the purpose of helping you improve by pointing out specific details that we think you might want to focus on. And then we have another section which is for the general trading questions, and here we want you to ask any questions related to trading and be as detailed as possible here as well. the more detail that you will be able to give us, the more help we're going to be able to give you. So let me get into Discord here and I'll show you how all of this looks. Okay, so we got the Discord server right here. I'm in the general channel right here on the trading desk, and the new section is going to be found under the break room right here, and you can go into submissions and you can see two threads. Yeah, I guess they're called threads, and you have the first one being YouTube trading questions, and then the other one is being YouTube trade reviews. You go in here and you post your chart. Now I think the best way to do this could be something like this. Okay, so I'm currently in long on EU, right? And you could either choose to have all your thoughts on the screen here. So I could do something like this. You can use perhaps the call out here in TradingView and put it in like this. I'm going long here because it's high time frame support. And if you have any questions for us in the live stream, you could do something like, should I wait for confirmation, and then confirmation, daily bullish engulfing, anything, right? Anything. And the more detail that you give us, and the line tool here as well is very, very good. Well, the path tool in TradingView is very good to kind of show us what your overall idea is. If you're looking for confirmation, is that the type of confirmation you want? Maybe a bullish candle on daily, breaking retest of that level for a move up here. Any type of detail is going to help us to kind of break it down in more detail. So you will post your trade setups, and me, Victor, and Alex will kind of break it down and help you develop as traders. And the same thing goes for the trading questions. Any question you have, just post it in here, let us know, and we'll break it down. And again, the more detail you give us, the better and more efficiently we can help you. All right, that's it. And I'm looking forward to seeing all your trade setups and all your questions. And hopefully next week we're going to start going through all of this. All right, take care, and I hope to see you all in the right. Just a quick video showing you the thing that we got going in Discord. We got a lot of questions on where to find the Discord link. Now, the Discord link, as you can see here, like OS says, the Discord link is in the 5ers hub. It's not a public Discord. You actually have to have a working account, the challenge with the 5ers. So a challenge or a funded account, just go into the hub and the program, and you'll get access to the Discord. Yes, you need an account for that. But this, we're not only doing the educational stuff for the members of the Discord, we're also doing this, for you guys on the live stream here. So you don't have to be in the Discord to be able to get educational value out of these live streams, but it's definitely a big plus, because with the things in the Discord, we can go really in depth on some of the stuff that we're talking about. So let's see, do we have anything right now? Yeah, we do have quite a few setups that we have today. So I want to look at a question, see if we can cover a question here today. Did you cover any of the questions in your Discord sessions?
Yeah, well, I have a question that I that someone asked me, so I'm going to let's discuss this one. I will have it ready in a few seconds. They're very good questions, I need to say. You can see that the members, they have this necessity of being able to ask question. I'll have this one. Let me show my screen. Yeah, so in Discord we have this question from our friend Etienne. Thank you for that question. We appreciate it. It says, after thanking us, and he mentions 3 questions. First one is, he's still working on, he says he trades the way I do, very similar. So about Quasimodo and order blocks, for those who don't know how I trade. and he has these 3 questions. I know you look on higher time frames for order blocks, but what time frame do you use to spot the Quasimodo pattern, which is, from what I understand, your trigger to place a trade? All right, so let's look at the question, what it means in terms of market structure. Okay, let me get this ready. So the question is, what time frame? Well, that depends. In my case, since the question is specific to my style, I wait for the when price comes back to the order block. I look for the Quasimodo, which is indeed my trigger to get the entry, and the time frame is the minutes: 5 minute, 3 minute, 2 minute, and 1 minute. Right? Those are the time frames that I use, and if I will show you, I can have it in a, let's say, I would change this to a, let's say this is a bearish bar. Oops, I didn't change it. Oh, let's see. That's the border. This is what I need. Right, so that is the bearish bar, and we have a bullish bar. Right, so this is the question. This is how I trade, and this is what I do when the market forms an order block and takes time to come back to it. Right, and this is the engulfing. So when market does this, and this, I then including the including the wicks, which I haven't pointed out here yet. Let's say there are a couple of wicks below here that I'm including now. This is the order block that is my basic component of the strategy. When price comes back, that is when I'm going to be moving out. But the trigger, and that's the question here, what is the time frame that I go when I do this? Let's say on the H4, H1, I go to the 1 minute, and let's say the price does this, comes back and moves out. Right, so in this area, right, if you zoom in, what you will see is that I wait as price is coming down. Right, price is coming down, I wait for that quasi to form, and all of this is here. So all of this is happening, and that's my trigger. So the quasi that I'll look for is on the 5, the 3, the 2, and the 1. Right, all of them. You don't have to trade all of them, but I get more signals, and it fits the way I trade. Let's see the next question. From what I understand, you place several trades inside one order block. If the Quasimodo patterns is the trigger for your first entry, then what are the triggers for the next entries? The thing is, when you have a Quasimodo, right, when you have this, remember, we are in the lower time frame. When you have this Quasimodo pattern, I don't have just, you may have just one entry order block, right? But in sometimes you have more than one, right? So what I do is I measure the distance that it has traveled before, right? And I identified the number of entry order block within the quasi. Remember, this is the entry time frame, so it's not the bigger hourly. When I have that, then I know, okay, I'm going to wait for price to come to these levels, to these areas, marked by the order blocks, for me to get my entry. And I need a rejection candlestick pattern happening inside or interacting with these order blocks for me to enter. So that is one signal. So the price could, let's say in this case, price can bounce off of this, move out, but sometimes you don't know in advance. Even if not sometimes, actually, you never know in advance which one it will be. It's a matter of probability. So what I have to do is, on each one, I would have another signal. So it will be one signal here, and another signal there. Without going into details, how I do the process of limiting myself, that I don't get cut by all those entries and those stop losses. That is basically how I do it. So um, the first entry is just the first order block that I get, right? That I get the signal, but I may have more than one. 3, how many trades do I have per week on average? Well, specifically the way I trade, I have around 15. My average is around 15 trades per week, but that can vary, right? Because it's only an average. It can be as low as 6, 7, 8, right? And as high as 25 sometimes, and something somewhere in between. But it usually around 15, I would say, depending on how how the market goes. So that is my answering this question. I really like those questions, Jonathan. I've seen
Yeah, they're
many
very
of
good.
them. Yeah, they're very good. They're very thought out. I like them. Keep them coming,
Yeah.
guys.
Yeah, definitely. If you are in the Discord, make sure you go to those channel as I showed you in the video. It's definitely. We're not gonna go through a lot of them today. I'm gonna plan to go through more of those tomorrow. I'm gonna go through some, see if we have any questions in the chat. I've marked some out here. All right, so I'm quickly going to go through these because after going through the questions, we will Victor will talk a little bit about reversal patterns. So what are the important factors we should consider when constructing our own system? So I think before you start constructing your own system, you should keep in mind that what type of trading system do you want to have? Do you want to have a swing trading system, a day trading system, an intraday or scalping trading? And this should be based on not only your trading personality, but also your life situation. I mean, if you have very, very little time to trade during the day, maybe you're not well suited to be a scalper. I mean, I can quickly an example here would be, so today I got my kids. My youngest kid is home with, I think it's called smallpox, with all the marks all over the body. It's smallpox, right? Isn't it? With when
Yes.
there's like small, yeah.
Yep.
I didn't know the English words. And so I got my fiance at home taking care of him, but she also got some stuff she needs to take care of. So right before lunch, I took care of him for like 2 hours, but I put alerts at all the levels. So I pulled out TradingView. I put alerts at all the levels. I was out in the garden, fixing some things in the garden, and I got some alerts. I pulled out my phone. I saw an alert from TradingView, went into TradingView on my phone. I saw that, so this was actually the CAD CHF trade. I saw that the CAD CHF trade broke out. I quickly just pulled up my laptop, entered orders, and then went about doing the stuff that I did. So for me, that type, like being a scalper in that situation would not be possible. So I'm viewing myself as more of a swing trading day trader because that fits my lifestyle and personality much, much better. I can trade while not being glued to the screen. So make sure that, I think those are the things you have to figure out first before constructing your system. And then of course, think in terms of entry trigger, stop loss placement, and TP strategy. That's the 3 main things you have to figure out. You need to have plans for all of that. First, figure out what entry trigger works, and then figure out a trade management system or a take profits system, basically, and a stop loss placement strategy. Those are 4, those are 3 individual things that every system has to have a very complete plan for when creating a trading system. Another good question: how to control over trading? Very simple. You have a rule that says, well, I have a rule that says no more than 2 trades per day. Okay, that's it. 2 trades per day. If I follow that rule, impossible for me to overtrade. So make a rule for how many trades So what you can do is you develop your system, you backtest your system, you look at the statistics. What's a normal amount of trades in a day for the system? I know for me, the way I'm trading, around 2 trades per day is normal. If I take 3 or 4 trades in a day, statistically I'm over trading. So very easy to control over trading by having rules like that. I've actually done a session on backtesting. I've recently done well, not recently, a couple of weeks ago, I did a session on my backtesting spreadsheet. I will plan. I will do a new one. I'll plan that for the future. I will take a quick look at gold. Quick look at gold here. But first, I always start at the weekly. So there's a lot of levels here. I think we can remove quite a lot of levels here. So I'm going to be doing a top-down analysis. We're going to start with the weekly, and we're going to go all the way down to the 5 minute to get an idea of direction here. Okay, so the weekly. Can't really say much on the weekly. It's just Monday, you know. But strong move to the upside. Just looking at the weekly. The first thing I'm thinking about is this down to that level. Something like this, basically. Daily, what I'm seeing here is a strong move to the upside that is losing momentum. And I'm biased to the downside from a purely technical perspective, looking at the local range-ish structure. But then again, the fact that we are in an explosive move to the upside, there's nothing that doesn't say that we're going to continue to the upside. Something that moves up probably going to continue to move up unless we have clear signs of a break of structure. 4 hour. Well, here it is. So I'm going to show you I'm going to go back to the GBP CHF trade, and I'm going to see if you can find any similarities between gold and GBP CHF. Okay, so this is GBP CHF. What I'm seeing on gold is currently trading up here. Okay, so this is where we are at gold. We go back to gold, and you will see what I'm saying. See this? What we have right here is a level that's probably about to break. And if we get a break and retest of this level, we have, like, if we have this structure on the 4 hour, we're probably going to go down to like 2,200 or 225, something like that, this level down here. But that's only if we do get that break and retest of the level, because right now what we're doing is we're actually trading within a range. And we could also see a bounce at the range lows up to range EQ for that. But right now I am, I guess, because of the fact that we are in a strong uptrend, but we do have a possible distribution range here, I would say I'm neutral. Looking at the 1 hour, the trend becomes quite clear here. I would say for me right now, there's no trade. If I would have to take a trade on gold, I would probably long here, just given the fact that it's support or it's range lows. But other than that, I think I would be looking for a break lower and for a possible swing trade to get in on a break and retest of that level. Would be nice to have a confirmation of a 4 hour bearish engulfing in that area. I would then take gold lower. Okay. That's gold. I'm getting a lot of questions here. Very nice. Demo trading and backtesting are different because demo trading is basically live trading. Well, basically, you're basically trading. It's forward testing. You're basically trading, but in live market conditions. Now, you're just not risking real money. You're trading a demo account. So demo trading is forward testing. Back testing is back testing. So it's two different things, but it's things you should be doing as part of the same process.
Yeah, I think demo has advantages above backtesting, but they're actually completely different, because backtesting you do to measure, to get data on your strategy, and demo you're actually practicing how you go about your flow, your process, how you get a feeling of how long should I be waiting. Practice that patience. And backtesting, you don't need to practice patience, actually, because you just scroll forward, right? So there is no need to wait, and that is something you can do in a demo environment without risking any money yet. So demo is helpful if you're in the early phases of your strategy, So you can get a feeling of how it would be, how long does it take before you can actually, start firing and start risking real money. So it's completely, I would say it's completely different. Uh, and they serve different purposes. And both of
Yeah.
them, you could skip demo, but I wouldn't do that. Then again, I wouldn't stay too long in demo because at the very early stage where you still don't have everything well defined and you don't have that data, and you don't know how you would perform in the market, it's better to do that in a safe environment where you're not risking anything. But as soon as you have a good grasp of how what the strategy should be, and you have data in your backtesting, and you get an idea, you're getting the same results with demo, there is really no reason to stay there, because you need to progress. You need to go with a live account, and with very little risk, but still live money. You're actually having some risk, some skin in the game, and that's how you progress. So there are different phases, I would say, in your system building process.
Yeah. I mean, I usually skip the demo trading part. I use risk very small on live trading, and usually what I do is I have like a risk management plan where, you could risk as small as the smallest lot size possible, to make sure that it's actually worth the risk and everything, and commissions and everything. But usually what I would do is so on the account that I have now, the 160K funded account, if I would, for example, start a completely new system, I would backtest that to get the good statistics, and then what I would do is I would risk is $50 a trade, and then for every profitable week or every other profitable week, I would double that risk until I have the desired risk that I want to do. So usually it takes it usually takes about 2 months of 2 months of live trading to get the desired risk that I want. And that's also what I recommend doing when demo trading. 2-month demo trading is good. If you have a good system in backtesting and you're able to be profitable for 2 months in demo trading, then go live trading is what I would say. Okay, so how do I qualify for a win? All right, so with the giveaway, what you're going to do is you're going to like the video. So all you have to do is like this video, and then we'll get more information on how to get into the giveaway after liking the video later in the live stream. I am so I think he's referring to a post I did on Twitter, on X, where I said I wanted to do one complete live stream where I'm kind of covering my whole system from my weekend trade planning, setting up all my levels and everything. So that's going to take a long time. It's probably going to be a live stream covering that, maybe in 2 parts. But I'm planning this, and I will probably do this in a week or max 2 weeks. So what you will see is basically I'll start scanning the markets, going through. So I go through about 45 forex pairs every weekend. I mark out all the levels. I add all the alerts. You will go through that whole process, and then I'll show you a couple of trades where the plans basically get activated. It's an insanely simple trading system that I'm using. It's so simple that literally I believe a 12-year-old could be trading this profitably. Like, I'm not kidding. It's so simple. Horizontal levels, high time frame, break and retest. It's incredibly simple, and I think simplicity is really the key to long-term success in trading. If you have a too advanced system, it's difficult. Okay, so next one, covered that one. This is a good comment on the Discord server, right? And I do definitely understand this approach, but the thing is, if you guys watch us go through trade setups that people in Discord, it's not only for the people posting the setup, it's a very good learning experience for everyone watching it. So it's not only for the specific person, posting the setup. It's, we go through them, and it will show everyone our thoughts on that setup, and it's going to be very helpful to everyone. Let's see. Oh, we haven't even mentioned Alex. Alex is actually on. He got a day off today, so he's out of the office today. So we haven't even mentioned him. I let us know in the comments if you guys miss him. Write something about Alex in the comments. I will screenshot that and I will send it over to him. So let us know if you do miss. I miss him. So I guess you do as well.
We do. We haven't mentioned him, but we do.
Okay, so this question, how to stop taking more when already intraday target hit. So first of all, I don't have targets. I think targets is a very bad idea to have in trading. You shouldn't have targets. Your only target should be to follow the process and follow your plan. EU, let's cover EU quickly. I will do a quick breakdown of EU. All right, so from the weekly, I said that I was going to do gold all the way down to the 5 minute, but it just doesn't make any sense. So EU is at support, and I'm thinking we're going to bounce. That's basically everything. Support, bounce. That's, you know, what else? Support is made to hold for a bounce. And if it breaks, I mean, it's just going to be a break and retest. Break this level to downside, break and retest lower. But right now we're holding support, so I'm thinking we're going to move higher. A trade idea that I had on EU, and well, now it looks terrible. It looks absolutely terrible. So on the weekly, it looks like it wants to bounce up to the previous range lows. On the daily, it kind of just holding. I think it kind of makes sense for a move higher. On the 4 hour, it gets a little bit messy. I think it's now in sort of a range. Let's look at the 1 hour. Let's remove that one. Yeah, it's clearly in some sort of range, but I mean, there's a possibility to get a really good entry here if we think that price is going to move higher. So let's see if we, yeah, so it's right now it's hitting the 0.618 of that move. Looking at the 15 minute, I mean, it's a break and retest of the 0.618. So this could be like, if you believe that, look at that break and retest of the 0.618, absolutely perfect. So if you do believe that Euro USD is going to move higher, I think that level right there is pretty good. Looking at the daily, the white dotted line right here is this daily low, which would be a good FTA if you're looking to go higher. And technically, I think this is still a valid long right here. We do have news coming out tomorrow. I do think we have some, yes, I mean, it's red folder news, but nothing too major. But I do think I'm definitely long. I'm definitely not long. I'm definitely biased to the upside. Definitely biased to the upside unless we break support. So as long as we stay above 0.6260, I would say I'm bullish on EU. Break that level to the downside, I would look for break and retest to the level which is 0.5090, which is down here. So either we get this or we get this. So my final analysis on EU is up or down. It's going to go up or down.
That is usually how it is, right? Because
yeah,
both sides have a certain probability of happening, because nothing is certain in the market, and it sounds silly that it's going to go up or down, but actually those are the two options besides going ranging, of course, going sideways, that the market has. And the only thing is, we as traders what we need to do is to identify when one of those direction has a more probability than the other, right? And when that happens, then you have a bias. You think, okay, this is more likely to go up or down than the other way around, right? And that's basically our job as traders. But in the reality, we don't know which one will happen first.
Yeah, but I also think, like, I also think it's not only about looking at the probability of going up or down. I think you can make plans based on the fact that prices are going to go up or down. So let's say you have a level where it's like, all right, we have a level here, it's support. Now, what usually happens when price hits support? Well, it bounces, right? Price usually bounces at support. But then you'll make a plan for what if it doesn't bounce on support, you know? So what I try to do, I always look at the market with a question of what happens if this happened, or what happens if, so I have alternative A or B. So looking at Euro USD here, I'm basically saying alternative A is go long. Alternative B is go short or break and retest. And then I have, activation plans for both of these, right? So I think that's very important to because then you'll be able to quickly switch your bias, and it's difficult when you look at a level and it's like, this is support, it has to bounce here, I'm gonna take a long, and then if it breaks lower, you're like, I don't know what to do. But if you make plans for both sides, it's gonna be much easier to be able to switch that bias. Right, so we have a couple of more questions. Journalist service, there's two that I recommend. It's TradeSella and Edgewonk. I'm using Edgewonk personally, and I do think that there's might be something going on in the background with Edgewonk and The5ers, maybe some discount code. I don't know, maybe in the future we'll get that for you guys. Edgewonk is really good journaling tool, and I think it's the cheapest one run as well, and it's probably one of the best ones, so definitely check that one out. All right, so this is a good question. So when you're looking at EU and GU, and let's say you find some, let's see if I understand the question correctly here. Yeah, okay. So basically what this is, it's about double exposure, okay? So EU and GU is most of the time correlated because they're basically traded against the USD. So if you have a long setup, like a very clear long setup on EU, chances are that you will also have a long bias on GU. So if you, for example, see that you have two long setups, one on EU and one on GU, most likely you'll see them at the same time, and you'll maybe even enter them at the same time. So you're double exposed to USD. So you now have two trades with risk against the American dollar. So basically what you're doing is you're going to be treating that at the same setup. So if your ordinary risk is, let's say, 1% per trade, you split that up and you risk 0.5% on both of these setups. That's the way I do it. So we can look at my screen here. We can look at GBP CHF. This one I'm in with half risk, okay? Half an hour risk. Why am I in this in half an hour risk? Well, because I'm in the exact same trade on Euro CHF. So this is Euro CHF. Now, as you can see, not even close to being as profitable GBP CHF. But imagine if I entered both of these, which is basically the exact same trade. What if I entered both of these with the same risk and they both hit stop loss? Well, I would take one trade with double risk, But now what I'm doing is I'm diversifying. I could have chosen one, and if I did choose Euro CHF, I would be very pissed seeing this, but now I diversified my risk into two different trades with basically the same technicals, and seem to be working out. So that's what I've been doing. So yeah, risk management. I think I have a very simple approach to risk management, and that is just I take one position per trade, one trade per setup, basically. Which is very different from Victor, but I risk, let's say I risk $200 on a trade. That's, let's say that's or 400. That's 0.25% on a trade. So I risk 0.25% on a setup, and that's it. One position, one trade. Very strict with my risk, always the same risk unless it's double exposure, and that's just my risk management system. It's just super simple. So if someone's going to talk about risk management, it should probably be Victor, because he has a much different approach, and maybe we'll plan that for the future. What do you think, Victor?
Sure. I think it's so essential. You can't be a good trader if you don't have a proper, adequate risk plan. There's no way around it. You can have the best edge in the world, but if you can't manage your risk, sooner or later you will blow up. The risk will creep up on you, and it will cost you everything you've worked for. So risk that's one of the pillars of trading. You can't skip that. You can't. There's no way around it. So yes, I'm very I'm very eager to share my thoughts upon that. Yeah, sure.
Yeah, and I think, honestly, I think when I started trading, I was like, risk management. What's that? I'm just gonna go all in here on this. So I started trading crypto and I started trading altcoins, and I'm like, I'm gonna, I remember risking like 25% of my whole portfolio on one trade, things like that. And I literally I didn't understand why risk management was, um, uh, yes, risk management. Like Alex's risk management is just you only live once, go all in. that's, that's basically
That's a
his
good
risk management.
characterization of his risk
That's
management.
just, yeah. No, but like
Yeah,
I
I think
remember when I
it's
started with like when I started learning risk management, like it just clicked. I'm like, how could I not have seen this before? Like, how could I not have, understood the importance of risk management? And now it's like it's so simple that it's like I don't. Some days I don't even understand why we need to explain it. It's so simple, right? But then I remember in the beginning I had no idea about risk management. So yeah, very, very important stuff.
yeah,
Very
I
important
see
stuff.
Alex putting some size there, man. I
Yeah.
wouldn't be able to. I'm so accustomed to breaking down my risk per trade so low, so down, so much down that I can have like 10 lots trading the same size he is, but I can only do that if I stack my position one on top of the other, and each one of them has their own signal, and I can start one. It'll be on a 100K account, that would be perhaps two lots, and then I may have another signal which another two lots, or maybe 1.5 lot, etc. And in the end, if I have like all of them are working, I may have 10 lots put on 12, but it's a process. So I'm one step in, another step, and that's how I build it up. But I see Alex, he knows how to risk and he's been having a very good run. Wow, he's been on fire, to be honestly.
Yeah. We'll see if that comes back to bite him, having those big lot sizes, but we'll see. I would definitely not be able to do that. So we have a question here on what risk management. So this is actually a good question. So what risk management would you recommend on a boot camp challenge? So I'm just going to go in. I've never traded the boot camp challenge. I have to go in and see what the actual stop loss is. Max 5%. Okay, so it's 5% for, and then when funded, it's 4%. Correct? Yeah, I think that's it.
Yes. Yeah, that's correct.
Okay, so 5%. Let's do some calculations here. Let's say you have, first of all, let's say you have a realistic win rate of someone trading maybe like me, or you're starting out and you're trading based on maybe the break and retest or something like that. So let's say you have let's say 35% win rate, which if I'm
That's
not,
very common. 35
yeah.
for a breakout strategy. That's very common.
So let's say 35% win rate, which means you would probably be profitable if you have an average R of 2, I believe. You should. So let's say you're aiming for trades that are 2 to 3 R. With a 35% win rate, you could easily have, not easily, but you could have a 10 trade losing streak. That's important to understand. And the chances of you having a 10 trade losing streak, if you look at the law of big numbers, if you look at hundreds of trades, it's actually going to happen. It's inevitable. You are going to have long losing streaks. So you have to take this into consideration. What if you risk 1% per trade? Okay. In a losing streak, you're down 10%. Well, actually, a bit more. You're down like 11% because it's compounding, right? If you have a set dollar amount. But let's say you're risking 1% per trade, you're down 10%. All right, so you cut that in half. What if you risk 0.5%? On a 10 trade losing streak, you're now going to be down 5%. Okay, so that's the max loss. So if you risk 0.25%, you're now down 2.5%. Okay, so let's say that is a 10. I'm going to do some count. So that's a 10 trade losing streak. Now imagine that you have a 15 trade losing streak, which, you know, is actually not, it's possible, right? You might, you know, go on tilt, you might make a lot of mental errors. It's going to be a 10 trade losing streak, and then 0.25% per trade, you're going to be down 3.75%, right? Imagine if you have a 20 trade losing streak. Now, this is not very likely, okay? It's possible, but it's not very likely, okay? So imagine that you're risking 0.25% per trade and you have a 20 trade losing streak. You're now going to be down 5%, which is your max loss. So what I would do is I would put the risk per trade at a level where you would think that it's impossible for you to lose the account if you have a massive losing streak. So if you look at your statistic, maybe you have a 50% win rate. You know, if you have a 50% win rate, having a losing streak of 20 is quite small. It's quite small. Possible, but quite small. So let's say you're risking 0.25% per trade, and then if you hit 10%, or if you hit 10 trades in a row, you cut risk in half until you have two winners in a row or something like that. So this would then literally make it almost impossible for you to lose the account. So if you risk half, a 0.25% or 0.2% or something like that, you'll be able to sustain 20 trade losing streaks. And this is the power of risk management, where you'll be able to survive insane losing streaks if and when they happen. Because even if they're not going to happen in your bootcamp challenge, they will happen on your funded account, and you don't want to lose that account. Do you agree with this way of looking at risk management, Victor?
Well, in terms of risk management, it's similar. It's similar. I can talk a lot about risk management because it's similar with strategies. The best strategy is the one that fits your personality, and that's also with risk management. I can show you what is the most, well, in my opinion, the most elegant and most adequate and optimal way to manage your risk. But if it doesn't fit your personality, if you're not that kind of a person, it will be likely that at some way you will not be able to execute it as it should be. So they have to take that into account. So sometimes, even though there is a better, in terms of mathematical way of doing it, sometimes you go with fixed lot, for example, instead how you manage risk, right? In terms of risk per trade, and which is not the best way, right? Because depending on your strategy, your stop loss might be changing all the time, which is most of the case. What happened, but it will be easier to follow, right? So it is a good rule that to hold you to have the same consistency in risk management. In terms of how I would manage risk in bootcamp accounts, to be specific, to me, it doesn't matter if it's a bootcamp account, if it's a two-step high stake account, if it's a hyper growth account. What I see is, I see the available drawdown. right? Available drawdown. That is the money that I have if I let's do some calculations here. I will show my screen for a little bit, if that's okay with you, Jonathan.
Yeah.
I risk management. It doesn't matter what kind of account you have. To me, my approach is I want to see the available drawdown, right? So that is because that is actually, in terms of risk, that is the most important metric to be considered. It's the essential metric, right? Once you hit that limit on your drawdown, it's over. So that is the first thing you need to consider. Okay, so how do you go about? Okay, once you know your available drawdown. In the case of a bootcamp, which the risk was, how much was the risk you mentioned? Max 5, but funded it's 4, right?
Yeah.
Yeah. Okay, but let's say 5%. Okay, 5%, and the high stakes is 10%, if I'm not mistaken, right? Yes, it's 10%. So in that case, what I check is I only look at the available drawdown. In the case of bootcamp, if you have a, let's say we are talking about a 100K account, right? Right. I would go in with the bootcamp and check what amount is that, right? So in that case, that would be, let me see, I can change this, can I? Yes, I can. So in that case, that would be 5,000, right? And in the case of high stakes, that would be 10,000, right? And those are the numbers. So regardless what type of program it is, I focus just on the available drawdown, because in the end, that is what's most important. So, and then I have to have data. I have to measure. I go back to what I mentioned before. You have to measure something before you can, either manipulate it, to manage it. You have to measure what is normal for your strategy. So you need to have data, at least a month of data, right? A period of a month, but actually it should be much better to have a longer period of data from which you can extract, okay, if I risk this amount, let's say $100 per risk, right? Per trade, I mean, right? What is my drawdown? You're not looking at your account yet, just looking at your strategy. What is my drawdown going to be, let's say, typically on a day? What will my account will be? What is the drawdown? Let's say at 100, you will measure your drawdown typical in a day. Let me see, average, right? Average drawdown in a day would be perhaps, I don't know, maybe it's around 500, right? And of course, you need to know the maximum as well. The average per month, that is on a day. Let's see, per day. And then you look at what is the average you will be doing. Let's say on a week, your average drawdown could be as high as 10 per week, correct? And 10 by 10, I mean 1,000, of course. So that's because $100, that's 1 hour, right? That's what you risk per trade. So what I would be doing is, the cursor is there. Yep. That's the average drawdown. And per month, you get another account that could be, I don't know, 1,500, right? That's the drawdown per month. Once you have this kind of data, right, about the average drawdown, your strategy, and I mean perfect execution. So once you have that data, now you can convert that to whatever account you have, because if you're only looking at the available drawdown you have, you can position yourself. Okay, you say, okay, If my average and given my max drawdown in a month is 1,500, then that means that I can risk, perhaps, let's say I can risk five times the amount, right? Let's say you are in a, let's assume we are in this account. Let's say we are doing the high stakes, right? Right, we're doing the high stakes, and we start with $100 per trade, and we measure in our strategy that the amount of the drawdown, the average and based on my max is 1,500 a month on the strategy. Now I want to say, okay, if I'm allowed to have 1,500 in a month on a drawdown, that is, and I have a limit of 10,000. How much closer of that limit do I want to be? Do I want to convert that to 5,000, right? To have a what is acceptable to me, right? And I would say, for example, you could do this, something like this. You do, okay, I'm gonna do 3 times. Let me see. 3 times $100. The cursor is not cooperating. I will do 300 per trade. If I do that, what happens is that my drawdown will not be 1,500 because I'm taking 3 times bigger size, so it will be 4,500. If you have a max drawdown limit of 10,000, right? Especially if you're on a challenge and you want to do it, you don't want to, spend a whole year doing it or 10 months. You want to do it quicker, then you can, customize your risk based on the data you have in your back testing or your forward testing, doesn't matter, but based on your data you have that is specific to your strategy, because it depends on your drawdown. If your drawdown is much higher, then you need to adjust that with your risk per trade. And that is how I look at it. I look at the drawdown, the max drawdown, the average drawdown, and I say, okay, if this is my drawdown, I'm going to assume that going forward, this will be my drawdown as well. And I adjust my risk, taking more or less, because I don't want to be close to that 10,000 max drawdown risk. Perhaps I don't want to exceed 5%. I want to be, within that have a safe margin distance with the max lot. That is how I do it. So I focus on the available drawdown, and I look at my data to tell me what is typical of my strategy. And based on that, I decide how close do I want to have my drawdown come in to the max drawdown limit. That is basically, in a nutshell, how I would approach it. So there is no one single answer to this. It depends on your strategy, right? If you have a high win rate strategy, then your risk reward will not be, your drawdown might be that deep, and you're allowed to take perhaps not $100 per trade, but maybe $500, because your strategy allows you that. But you need to measure, you need to have data. Otherwise, you're coming back to the analogy you mentioned about driving without a driving license, without the driving skills. That is very good. I would say if you trade without the data of your strategy and you executing that strategy, that is similar to walking in a room with your eyes closed. You don't know what the obstacles are, how to manage your risk, because you can't see anything. You don't have any data. Once you open your eyes, of course you can identify the risk and manage your risk accordingly. And that's the same thing with trading. You need to open your eyes through data to know what kind of strategy you are. How does it typically behave? And you need more than just 1 month of data, because 1 month may not be the same as other months. But you need to have some decent amount of time based on the data to have some certainty what you're going, because otherwise you're gambling. And we're, as traders, we're not supposed to be gambling, right? We need to be taking calculated risk We're taking risk because otherwise there's no trading. But you need to take calculated risk, knowing your data, knowing the limits of your strategy and of the program and of yourself, right? Because the backtesting is only talks about the strategy, but it doesn't talk about the trader doing that. That data comes from forward testing, right? So every segment has its purpose, right? Backtesting is most about the strategy. Forward testing is much more about you executing that strategy, right? Including the strategy, but also including you. So there's a lot we can continue talking about, and I'll gladly talk about risk management in more detail, because this is very quickly done on a few minutes, but we can surely talk. I mean, I think we should talk about this because
yeah,
it's
I think we should definitely let's remember that. Let's remember this. We want to talk about risk management next week. I believe we should definitely have, because like the way you're explaining this, like I'm I'm sure it's a wonderful way of doing risk management, but I have a hard time understanding this approach, and I'm pretty sure a lot of you guys watching this have a difficulty understanding an approach like this. I think we have to really break it down in a simple way and have examples. Like maybe next week we'll do like, all right, so these are my statistics, and this is the account I'm trading. How exactly am I going to understand what my drawdown is and come to a conclusion? I also think that it's like my way of doing risk management is just to basically make sure that I survive a long losing streak, and I try to be consistent with risk, which I think is the best way of doing it. I remember you said that you shouldn't be consistent with risk, but that's the way I think that's the best. That's the best approach for me, at least.
Well, it depends on the person, right? Because it needs to be a good fit. If you don't have like a proper like plan about it, then it's better not to change the risk, right? Stay doing the same thing because it's simpler, and simpler is most of the time is better. But if you want to have like an optimal way of dealing with risk, then the risk, actually, when I say change the risk, it's the dollar amount that changes, but the percentage of your available drawdown does not change. So on the percentage term, it's a fixed percentage risk. It's only the dollar amount.
Is the dollar amount changing because of the account balance changing?
Not the account balance, but the available DD, right? The available drawdown.
Okay.
The available drawdown, because
I feel borderline retarded going through this, honestly. Like, you have to break it down to me like I'm 12, and I think we should do that. I think we should do that next week.
But what you mentioned is very good. The other, this is one approach. One approach is looking at the equity curve, because that's what actually I'm doing, looking at the equity curve and looking at the max drawdown you have suffered in, let's say, a month, in whatever data you have. The longer, the better. And based on that long-term DD, right, the maximal drawdown you have suffered in your data, you customize your risk setting. Because the thing is, but what I want to say is, you can also do that more quickly sometimes by looking at the streak, right? The way you do it, you look at how likely am I to get a 10 losing streak, and how likely is it that I get a 20 straight losing losing streak of 20 trades, right? And that is also a very valid way to do it. There's nothing wrong with that. The only issue is, as with many things, right, when you make a choice, there are pros and cons of each approach. And the first approach is that it may be much quicker and efficient to do the way you do it, because you only need one data, which is my losing streak. How likely is that going to happen? And based on your win rate, you can, and also in your data, you can spot that place where you lost in a row. So it's very efficient, very quickly, and that may be the best thing, because if it works for you or anyone else, then it can work, right? The other way I do it needs more time, because you have to reconstruct your equity curve, right? And it takes more time, but that's the con, right? The disadvantage of it. But the advantage is that you actually are measuring the drawdown, because a losing streak, maybe 20 trade losing streak, is very highly unlikely, but you could have 10 very close to each other, right? So you lose 10, you lose 10, and then you win 3, and then you lose 10 again. I mean, that could happen. And if you're only measuring on that losing streak, the 10, which was the max you measured in your data, then you're not prepared to handle that extra 10 that might happen, because who is to say that after that max losing streak that you're gonna be going out of the drawdown completely? You may still linger there.
That's a very important point. When I talk about this, I usually say like max losing streak. But if you look at like 200 trades in a row, it's all about like, if those losing streaks come too often because of mental errors, you're still going to have a negative, still going to have like a negative equity curve, even if you have a good and you might lose that account anyway. I think
actually I made this is a representation of an equity curve.
I'm gonna go get some coffee. Okay, is that all right? Or is this
sure.
explanation for me?
No. Actually, it's about the what we're talking. But you're free to go to the coffee.
Can we do a 10-minute break though before, and then because I really want to listen to this. Because do you want to do a 10-minute break and then we'll get back?
Sure. Let's do that.
All right. Let us know in the comments if you want a 10-minute break. You know what? Doesn't matter. We're gonna have a 10-minute break anyway. See you guys in 10 minutes. What's up, guys? Welcome back. So Victor has his screen on. I just want to show you before we go on with what Victor talked about. Remember to hit that like. I'm going to be sharing the giveaway link soon, but we have currently about 570 likes. I want that number to go up to at least 600 before we give out the giveaway link. So make sure you do hit that like. One final thing I want to show here is USD CAD. I'm looking for a move lower on USD CAD, and interestingly enough, we have something here which looks like a possible head and shoulders pattern. I know you guys love your head and shoulder pattern, so we do have some sort of head and shoulder pattern here with a break below the neckline, and I am now looking for a rejection here at the neckline of that level. It's basically just a breakup structure here. So that's what I'm looking at. I got the 1 hour here, and I'm gonna put an alert down here and one above. So if this 1 hour candle, maybe you have a maybe it's gonna close down here with a nice little wick here, I might enter this trade for a move lower, and that's based on the fact that we have a very, very obvious level below here that kind of looks like it wants to get retested, and we're starting that rejection at a high time frame level. So kind of also like almost like a range trade here, where we're going short around the range highs. So this would be the range highs, or move down to the range EQ, the middle of the range. So that's what I'm looking at on USD CAD. All right, Victor, you talked about you wanted to cover something with before we went on.
Let me show what I was referring to. I got it here. I missed where it was, but yeah, this is what I'm talking about. This is, let's say this is your equity curve, right? So this is how your account looks like when you're trading. These are the profits on the y-axis, and time, or the number of trades on the x-axis, right? So the approach you mentioned is by measuring the losing streak in order to gauge or get an idea of what your risk should be. And that is a good way. That is definitely, it's a valid way. It's very efficient, it's very quick, because you only need one metric, and that is measure in your data what is the most losing, the longest losing streak you've had, and that will give you an idea. And you either take double that, or you make 1.5 factor, you increase that. So that is good. Nothing wrong to say about it. But this is what I mean. Assume that you measure this assuming that this is your data, this is your equity curve, and you go about to look for the longest losing streak, and you measure that's the longest downward movement in your equity curve without any wins, right? So this would be your losing streak, the effect it has on the equity curve. But however, that is not what you actually want to measure is what is the drawdown that you will what you want is you want to get an idea of what can I expect, what will be my max drawdown on the account. And the max drawdown is not always, actually. I think it's usually it's not the let's say it is not the amount your equity goes down during a losing streak only, because after the losing streak it can continue to go down even if that is not on a streak, right? And or before the streak it could have been already in the drawdown, because what we see here, let me see if I can do it nicely. This strategy, right, this equity curve can happen anytime. Let me get this like this. How do you know that when you start, because in this case we started going up with profits, right? And it didn't go low. But how do you know where you're going to be in your in your in your in your equity curve, in the phases of your strategy when you're starting a challenge? You don't know. What could happen is, for example, is this: you could be starting right at that moment. I'll change this because it's assuming that your strategy you started trading your strategy, and uh, you know instead of the time, imagine that this part didn't exist, right? This part is not part of the equity curve, but you start here, right? Imagine you start here and it goes straight away into drawdown. And so what you actually want to measure is the actual drawdown of your strategy. What is typical? What is your average? What is your max? If you know that, right, and that is the distance between the highest point in the equity and the lowest point within your equity curve, that is the metric that you're actually, that gives you more accurate information about the risk that you're going to be taking. Because once you know the maximum, then you can say, okay, I'm going to position myself in terms of percentage of risk I take, to make sure that if I have a similar, and that's an assumption, if I have a similar drawdown again, it will be not more than 5 or 6 or 8 or whatever that limit you choose. In any case, below the 10, if 10 is the max limit of your account. But you don't, by only measuring the distance of the effect on the equity curve when you have a losing streak. It is a valid way, but you're only measuring part of the drawdown. You still don't know what will the actual drawdown be, because it will not be the only time, the only cause of a drawdown, the max losing streak. So that is what I wanted to show.
That makes perfect sense. Before we move on, guys, I've added the link in the giveaway link is found in the comment section, the live chat on YouTube. It's a pinned comment. So you go to the comment chat and you will see the pinned comment, and then you use the code 123456 to enter the giveaway. And make sure that you also like the video when doing that. So Alex is not here right now. Alex will, when he gets home later today, he will take care of the giveaway and draw all the winners and send out all the emails to everyone that have won. So you will know if you have won later today. Unfortunately, I don't have any way of going into the back end of Glean to actually activate all of that. So Alex will have to do that once he gets back. So you'll have to wait a few hours after this. But that's it. You go to the link, you put in the secret word, and you'll get to know later today if you have won the account or not. And make sure that you keep on hitting the like, because I will tell Alex that the number of likes or the number of accounts that he's going to give away is going to be based on the likes at the end of the live stream. So make sure that you just keep on hitting that like and get in on the giveaway, which is found in the pinned comment in the comment section. So that risk management approach is like it makes total sense. It makes perfect sense. Okay, so because the way I look at it, just looking at a losing streak, and then like you said, if you have a 10 losing streak and then 5 winners and then another 10 losing streak, not likely, but it's definitely possible. Statistically, not likely, but because of mental errors and all of that, it definitely makes sense, the approach that you're okay. So
Yes.
Alex can actually do the draw. Let's see. And we had a comment here, and yes, we are definitely deviating from today's topic on reversal patterns. But honestly, I felt like we were in quite a good flow here with all the questions, and some. Yes, I know we shouldn't be deviating from the topic, but sometimes we're in a good flow, and we got a good topic here, and kind of we're just going with the flow. I'm gonna see if we can ask Alex if he can do the draw. So. I'm going to ask him if he can do that. So I'll ask him if he can do the draw in about 15 minutes. And we will, I think we'll do reversal patterns another time. I think this has been a good discussion here today. We've, covered a lot of good things. We covered, important things, to say the least.
Yeah, I saw a question that someone asked. I will show it. Let's see. And this is crucial. I think this person gets it completely. Henry says, so with a risk management based on fixed percent of your drawdown as risk per trade, your risk in dollar value exponentially decreases as your account decreases. Yes, that is exactly right. If you put it in a graph, right? If you have this being the equity curve, right? So let me get that line, and let's say this is the 0. So here you start at 0. You don't have the cross. There is no drawdown. And as you go down, this being negative, right? This is below 0. As you go down in your equity curve, you're going down less steep. In a sense, you are avoiding reaching your because you're always taking a percentage. You're only risking a smaller percentage as you're going down. And actually, I should. The proper way to do it is that it's steeper at the beginning and it goes slower and slower. In the end, it's very, very difficult to lose your account this way, right? And the same way when you do it on your in profit, you will, as you start you have more available drawdown, right? You will start increasing your risk automatically because it's a percentage of that increased amount. So what will happen is that you will have something like this, right? It'll go exponentially. And this is the kind of equity curve you want to have in terms of risk management. When you're losing, you want to be decreasing your risk. And when you're winning, you want to be increasing your risk, right? And I believe, but this is, of course, this is perhaps not for everyone as applicable. Or executable. So in some other specific situation, you might just choose a fixed dollar risk and just stick to it the whole, let's say, whole month or whole challenge, because it's easier, it's more efficient. There's less chance of making an error in comparison to, let's say, this way, which you will need to be calculating your risk very frequently. I do that every day, right? So I can get this kind of effect on my equity curve. But it does take more effort, and there's a little more chance that you might be doing an error, human error, right? While if you do fixed risk, there's less chance of getting an error. And in the end, you need to see which one is more important for you. Do you want something that is easier, more efficient, less chance of making an error? In that case, you go with something fixed, right? You do calculate it based on percentages, but you don't change it mid, let's say, after a day, after winnings or losing. You keep continuing with the same risk amount. Let's say it's 100. You stick to 100 all the way to the end, all the way to you get to your target. Or you can do it the way I do it, which is the more optimal way in terms of risk, right? Because you are giving yourself more equity when you are more allowing yourself, you're earning the right to risk more as you're performing better. And that makes sense. So it's in that way, it's better. But in execution, as I said, it does take more time, more effort, and you need to evaluate which one is more important for you. So there's not like a single way that everyone, that's the single answer. This is the way everyone should do it, right? As traders, we are individuals, and you need to take that into account, right? We
Yeah, I
all
think
of us, we have different, characteristics, different strengths and weaknesses, and you need to play. You need to organize your system, your strategy, your flow based in taking into account your personality, your weaknesses, your strength, and so this is something, a choice. It's not something, you're not obligated to do it this way.
Yeah, I think it's a very interesting approach. And honestly, I think so. Right now in the background, Alex is about to draw the winners. So we're currently at 652 likes, which means that we're going to give away six 20K accounts, I believe. And yeah, so
Perhaps I can
I believe this.
go ahead.
I think this 1, 2, 3, 4, 5. All right, so I got the winners. And I will present them very.
I can too if you want to.
shortly.
Would you like me to paste it on the
Yeah,
chart?
shortly. So I will say something. Yeah, okay. So what I want to do, like now, when you talked about this risk management idea, it kind of clicked, and I'm thinking, yeah, I want to apply this to my own trading, because it's almost like like my approach. I can definitely now see the weakness in my approach, having that consistent approach, like you just showed with especially that equity curve right there. I can easily see how there's a weak spot in having that risk approach. So I think I would love to try to apply your risk management, what you've just described. I would love to apply that to my own trading. So I think next week we should have a session where you basically teach me this, and then I start using this live, and we'll see how that goes. Let us know, guys, in the comments if you like that, if you would like to see. Yeah, I like this way of risk management as well. It's much more advanced than what I have, but I'm pretty sure that that it's as easy, almost like my approach. You just have to understand the process of doing this. But what really caught my attention here is the fact that you're lowering risk when it's not going well, and then you're increasing risk when it's going well. You're rewarding yourself for trading well, and I love that. That's a very, very good concept, and I feel like I just have to implement that in my trading.
It is a matter of survival, right? The last thing you want to happen with your account is for it to blow up, and what is it? What makes it blow up? Well, when does it is when you hit that limit. And so we need to have a way to mitigate the chance, to decrease the chance of hitting it. And this way is one way to do it, because I strongly believe it will save a lot of accounts if you lower your risk when you're in drawdown. A lot.
Yeah,
many
definitely
accounts.
I think it's a really good approach. Let's so we have drawn winners. Maybe you can pull them up on screen, Victor, and
yes.
I'm gonna talk a little bit about what will happen here. So we got the winners, and you will all get an email from Alex later today. So the winners are right here on the screen. We got 1, 2, 3, 4, 5, 6 accounts. So congratulations to everyone who participated in the giveaway. You should now be getting an email, and then later today you will get an email from Alex once he is back at home, so he's out of office today. Now tomorrow we have a very, very interesting live stream. I don't know if you guys remember, but we uploaded an interview with that it's we got it looks like we have duplicate winners right here, Marcos P and Marcos P. We have to make sure we fix that. Yeah, we're gonna repick that one. I'll ask Alex to repick. Marco P won twice, so we have to make sure that we'll make a repick. Let's see. I'm just send a message to Alex to see if we can figure out that
I think
one.
Marco P. I think the Marcos P needs to go buy a lottery today. Don't you think?
Yeah, if I were him, yeah. But, it does feel quite. How's that even possible? It seems very unlikely that you're gonna win twice. I see a lot of people.
Yeah, the chances are how many were in the draw today? 600?
I don't know. Like I can't really, probably 300, but still I feel like the fact that Marco P won twice kind of makes me question Gleam.
Let me see. Actually, do we have still have extra points for recurrent?
Yeah, we do. So
maybe that's the thing. Yeah, because the chances, if we didn't have loyalty points, the chances of getting two of the same person in this list is about 1 in 60,000. So
yeah, so that's
I don't think that's
yeah.
I think the loyalty points are made. This is the work of loyalty points. Maybe
yeah, I think so. Maybe we need to talk about the fact. Maybe we need to talk about removing the loyalty points so that everyone
or
that
decreasing
joins
decreasing it.
Decreasing it maybe.
Not 10, 20, but maybe just 50%, something like that.
Because it does feel a bit unjust to people who's just joining. Maybe we'll have a cap of I'll see. We'll see.
Yeah, a cap will do. Maybe a 2. Like you have double the chance if you pass a certain threshold, but not 10 times or 20 times.
Yeah, so guys, our plan is to make this as good as possible, to make this as just as possible for everyone in here. So we're trying to do our best to really make sure that we get everything as correctly as possible here. Alex is not answering, so what we'll do is Alex will repick a winner, but we can't do that right now. What you're seeing on Victor's screen is just a screenshot that has been sent on Alex. Now, Alex is probably out potting, doing whatnot, because he got a day off and he's not replying to my messages anymore. So he's like, screw this, I'm out. So he will repick that when he's back at home. And then on every Tuesday, we have a meeting, like a trading room meeting where we talk about this. So on Tuesday, I will make sure to bring this up and I will talk about the fact that making sure that it's we'll look over Gleam, we'll look over these the things that we got going on, because this should not be possible to have the same person winning in the same, like the odds are just insanely small.
Yeah, I think it's as I said, I think it's the loyalty that needs to be adjusted, because this is 1 in 60,000 happens. We haven't done these many times. I mean, we've been doing this a couple of dozen times, the draws.
Yeah,
and it shouldn't happen this quickly, I think. But anyways, I almost did something quite horrible. I almost did it. I didn't do it. There was on my we have of course, you viewers, we have a button where we can end the stream, right? When we end the stream, there's a button there on the application where you click it. And I had a notification that came right in front of that button. and I click to to click away that notification. But if by any chance that notification would have gone by itself, and at that same moment I'm clicking, I would have clicked on that button and I would have ended the stream beforehand. So that's a mental note for myself to never touch any any
Yeah.
notification if it's close to that button. I skip, my heart skip a beat there.
Yeah, I
Luckily
remember
I didn't do it.
we had Saul on, the CEO, and we did a scalping session with him, and
Uh-huh.
he was supposed to be on for 1 hour, and then we had 1 hour extra. And he's like, "Yeah, okay, guys, I'm leaving." And then what he did instead was just he ended the stream without leaving it first. Yeah. All right, guys. So tomorrow we have a very exciting live stream. We are going to interview. Well, actually, we got Griff, who is a trader from the UK, I believe. He's a 125K funded trader, and he's going to talk about his trading strategy and how he withdrew over $7,000 from this account. So one very interesting thing with Griff is the fact that he bought a Bootcamp challenge account once, and then he got funded, and now he's trading a 125K account. So he bought one account. The first account he bought, he passed the challenge, and he scaled that account. That is not very often we see something like that. This is a great trader. He has a lot of information that he's going to share with us tomorrow. I'm going to ask him some tough questions. I'm going to ask the questions that I know that you guys want to see. I'm going to ask him the details of his trading system. You know, what does the entries look like, the take profit strategy. Everyone, my plan is to ask all our guests the questions so that you, the viewers, will be able to replicate what they are doing. So make sure that you do join tomorrow.
Yeah, actually, I think it's great that he's coming on, because he is. I mean, it's quite a feat to be funded with your first challenge. I mean, that is, we've all been there, and we all dreamt about it. But I mean, I haven't known anyone doing that like he did. So it's a great hats off to him, because he is doing a lot of things very well. And I without spilling the beans of the content of what his answers will be, but do come tomorrow, because the reason he was able to do that is very important. There's a very important lesson to be learned there.
Yeah, so, definitely. No, it's going to be an exciting one. All right, Victor, thank you for joining, and thank me for joining, and thank everyone for joining. I do appreciate everyone. And today, especially today, we had a lot of good questions. So keep that up. Keep the questions, the engagement really good. It's obvious here that the quality of these live streams and the quality of your questions is just amazing. So keep on doing what you're doing, and I do highly recommend that you guys come in and ask the questions. It's not only is it good for you from a learning experience, but it's also challenging for us, to answer these questions, and we kind of start good discussions between ourselves here as well. So very appreciated that you guys come in here with good content. Basically, you're giving us free content with these great questions.
And don't forget to like, guys. Very important. Do like us if you think, if you feel, if you're noticing that we're bringing value to you, and you think this should be continuing, we should be doing more of this. Show your appreciation by clicking that like. We will make a big difference to us. So do that. That will make the algorithm YouTube uses to show different videos, to pick our session more often, right? And show it to more people. The more people see it, the more people can learn and enjoy those same values and same lessons and knowledge that your guys are getting. If you think this is useful for you, and you think it is good for others, do click that like.
All right. Thanks, guys. We will see you tomorrow. Take care.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.